Breaking the mold and doing it differently can be tough, particularly in the supermarket industry. But one group of chains has done just that. Let's call them alternative grocers. Generally, they feature a focused vision on health and high quality, smaller stores, fewer SKUs, higher margins, unique store brands, highly trained and motivated associates. Although their format isn't for everybody, they generally appeal to a particular consumer that is usually well-informed and frequently affluent. This type of operation does appear to have some upside potential in growth and profitability. Indeed, the numbers can be surprising. Fresh Markets, based in Greensboro, North Carolina, operates 121 specialty food stores throughout the South and East, with strong concentrations in North Carolina, Georgia, and Florida. It operates minimal numbers of stores in each of the other 18 states in its marketing area. The chain generated $1.1 billion in sales in this last fiscal year into January, up 11% from the previous year, and net income of $51 million, more than double the previous year. Its growth track has continued this year with a 22% increase in sales to $637 million in the first half and a 36% jump in net income to nearly $33 million. The chain added 13 stores in fiscal 2011 and a further 7 in the first half of the current year. Statistically, the chain has become a high performer. Its ratio of net income to sales is around 5%. Sales per square foot were $501 in the last fiscal year. Currently, the units are generating over $200,000 weekly. Comparable store growth was over 5% in the last fiscal year, and this has been ratcheted up to 8% in the first half of the current year. The chain's go-to-market strategy propels these numbers. The stores are modest in size at 21,200 square feet. The mix is upscale with a strong skew towards perishables, which account for 2/3 of sales. Moreover, just as it is in other alternative grocery chains, private label for Fresh Market is a big factor in developing a customer franchise and building profits. Their program is robust and features unique products under the TFM label as well as national brand equivalents. TFM items are highly visible throughout the store, and some 16 of them appeared in a recent 8.5 by 10 16-page circular. The store brand program and the perishables-oriented mix helped the operation to develop gross margins of around 34%. A privately held alternative grocer, Sprouts Farmers Market, is well on its way to becoming a factor in the natural organic segment and currently operates in 8 western and southwestern states. The chain, headquartered in Phoenix, has definitely put itself on an aggressive growth path. 10 to 15 stores are slated to be opened annually, a 7 to 10% increase on the current base. And earlier this year, it acquired the Sunflower Farmers Market chain of natural organic supermarkets. The addition of these 35 units, being renamed Sprouts, brought the chain's store total up to where it now operates around 150 units. The combined operation is estimated by Stores Magazine to be able to generate nearly $2 billion in sales for 2012, which, if true, would put the per-store volume in the $13 million, $14 million range for the year and around $250,000 plus a week. In line with other alternative grocers, store size tends to be smaller than, for example, a newly opened full-service traditional supermarket. Sprouts offers natural and organic products including bulk items, high-quality meat and seafood, local and regional produce, and vitamins and supplements. Store brands using the Sprouts label are prominent in the mix. Alternative grocers can produce excellent growth and productivity numbers. They are a segment to very carefully watch, particularly how they leverage the intersection of an upscale natural organic mix, store size and presentation, store brands, and qualified associates to generate high performance. Roy White, reporting for PLMALive.